So over the weekend, traders really spoke about how the market was undecided in the overall direction in which it wanted to move. Now today, as at Monday, the 6th of October 2014, you can see this one individual candlestick which we are looking at on the daily. This is what we call a high wave spinning top individual candlestick. And what it's really showing us is that indecision is still current in the marketplace. The higher and lower wick indicate extreme buying and selling pressure, but the overall movement in the market is only down 17 points on the Dow Jones Industrial Average. That is absolutely nothing. If we change to the S&P, you can also see this is more of just a normal spinning top, only down 3 points on the S&P. And when we have a look at the Nasdaq to really confirm what the other two markets are saying, this individual candlestick is a little bit more bearish. It's what we call a bearish engulfing candlestick pattern, and it is technically showing up at an interesting location. It is showing up at a very important resistance level around 4,475. The Nasdaq closed down 20 points, but I really want to dwell on what the Dow Jones Industrial Average is doing because it really drives the other two markets. Now again, we've spoken about the clear lack of decision or an apparent amount of indecision in the marketplace. Can we really draw anything really away from today's individual candlestick? No, we cannot. It hasn't really added to the picture. If anything, it's just clarifying what we already know. The best thing to do at the moment, traders all around the world, is to stay on the sidelines if an overwhelming trade isn't presented to you. What I mean is, do not go out and start looking and go fishing for trades when the market opportunity isn't really being presented. All right, it's no use to do that, and it's simply moving into the fact that you are going to overtrade when the market isn't really telling you to do so. If you go through some individual stocks, Apple hasn't triggered. You can see right here, it's just had a really nothing day. Amazon hasn't done anything either, only down 54 cents, no real net movement there. AXP starting to bounce off from that support level. Technically, yes, you could be triggered if you wanted to have an aggressive swing trade. You can see the target here or the trigger about 87.42. A little bit of a bearish counterattack candlestick. It's okay if you're in that trade. Just do or tighten the stop as we spoke about over the weekend. Baidu again, only up 75 cents. It's really done nothing as expected in the overall market. Same with Caterpillar, a little bit of a hammer candlestick at support, up 61 cents. Nothing really to talk about there. FAS, a little bit of a bearish counterattack at that resistance level. Very similar actually to that of the Nasdaq. You can see this individual candlestick right here. However, the Nasdaq did close a little bit lower, so you can see that. Look, these two, or at least this indice and also this index, are a little bit more bearish in the way of daily candlesticks. However, there is no very stellar swing trade set up. Google again had a little bit of a bounce, up $1.53. Nothing too much in the scope of a $590 stock. $1.50 is absolutely chump change. HD trying to break out. This is one stock which I did like over the weekend. If the market does miraculously move higher, again, we've got the limited upside, which I do believe around 17,140. HD is really one of those go-to stocks. It is in a very nice bullish trend. It has had that awesome gap. Going back to mid-August, an earnings gap, we've pulled back down into those exponential moving averages right here. I've got another bounce just here, and it looks to be continuing in the bullish trend. So HD is something to keep an eye on. JPM getting closer to our bullish trade trigger, but no real significant movement there. Netflix is bounced higher. It's up $3 or almost $4, right around our bullish trade trigger. Looking good. Keep that to the pro analysis class. Starbucks again, a little bit of a bearish counter attack. Nice sort of bearish signal. However, there is no net movement below our swing lows yet. It's just sort of giving us the signals that we're looking for, which we expect to show up in the near future. Again, XOM bouncing off from this macro support level. You can see the support level going back to February and March 2014. Acted as resistance in November and December 2013, and it almost acted as resistance over here in July and August 2013. We have what we call a little bit of a shooting star candlestick, a little bit of an upper wick, but indication is saying that, look, this is starting to change and momentum is starting to move higher. Pay attention, traders around the world. Earnings dates are coming up for many of the big players in the way of the US markets anyway. October is the busy reporting month. It also moves into November 2014 as well. So if the stocks that you're looking at trading aren't presenting their financials or their records in October, it's most likely going to occur in November. So that's a bit of a Monday afternoon market recap. Again, no real major movements taking place over the weekend. We will see very strong directional movement come into the market in more clearer or at least simple terms in the way of swing trade strategies, which are going to present themselves for us. At the moment, it's best to let the market sort of wriggle out all of the novice traders out there, all of the intraday traders who are just fighting off or fighting for just a little piece of the next big swing movement. All the best, ladies and gentlemen around the world. I'll see you all on Wednesday for another midweek market update. All the best. Goodbye.